We had some data that came out saying, look, inflation is coming down. You look at wage growth, that's also coming down. Does it change your view on how inflation will behave?
The recent data is good news. Inflation came down pretty significantly, and that's both headline and core. But the biggest contributor was really energy, so not a huge surprise, but good news for sure. The labor market data was also pretty positive. Wage growth decelerated a little bit. It's still incredibly high, though, and so I would put all of this in the category of good news. But I think there are still reasons to worry about the persistence of inflation in the UK.
Would you still vote the same way you did last time?
So the vote isn't for a little while. We'll get a whole bunch of indicators on the activity side, so looking at how the economy is holding up, and I'll need to see that before I really know exactly how I'm going to vote. But just so you have a sense of kind of what I'm looking at, in the inflation data in particular, the headline figure came down, the core CPI figure came down, but if you look at services inflation, which is the best place to look if you're looking for signs of persistence, you can strip out kind of the energy-intensive part of services inflation, and the rest is kind of flatlining. So it's good news that all of this is coming down. The fact that that isn't coming down reliably and sustainably is a little bit of a worry that we might still be facing persistence. And of course, if you look at the wage growth, it's very high regardless of which metric you're really looking at. And so if we have an economy with fairly low productivity growth and really high wage growth, it's going to be hard to hit the target. We will, but that's a worry about persistence as well.
So, I mean, what overall do you worry about the most, actually? Is it that there's something with inflation? I mean, I know we've had a whole number of analogies about, mountaintop or how everything does. What's the biggest risk of a mistake right now?
So I think that my biggest worry is that there is persistence of inflation. Of course, that has to be balanced. Inflation is our main target, but that has to be balanced with indicators of activity, and we are seeing that the economy is slowing. So the goal is to bring inflation to our target over the medium term without causing too much of a slowing of the economy. That's the needle that we're trying to thread.
So what's your current take on the policy stance? Is it pretty much there, or actually is it off?
We're in restrictive territory, and that's good. I think we need to be in restrictive territory. The question is, are we restrictive enough? And that will depend on the data. The question is also, how long are we going to be restrictive? And I think that there are reasons to think that the economy may be structurally a little bit different, that suggests that actually we might need to stay restrictive for longer.
And this is something that markets haven't really quite clocked onto. Is that fair?
So I think markets globally haven't really clocked onto this, and so there is aggressive pricing for cuts in the U.S., for example. Yeah. You're also seeing it in the Eurozone. I think the notion that the long-run neutral rate might be a bit higher and, the natural rate of unemployment might be a bit higher isn't something everyone's grappling with, but it just suggests that the world's going to look a little bit different once the dust all settles than it did before the pandemic, and it suggests we might need to be restrictive for longer.
Megan, so how quickly could you see cuts when you look at your timeline of when you're expecting the first cuts? I mean, markets are pricing in, I think, July of next year.
Yeah, Fran, I'm not thinking about cuts at the moment. I don't think that's where we are.